Hello, my name is Pat Carroll. I'm the Vice President of Human Resources for TFC Recycling. This video that we're doing today is designed for you as a new employee to learn in a little bit more detail some things about our health care benefits and our dental benefits with TFC. Let me begin by saying that full-time employees are eligible for either one of these benefits at the first of the month after 60 days of employment. So as an example, today is September 15th. So if you were hired on September 15th of this year, you would have the balance of September plus October and November for the 60-day requirement, and then on the 1st of December you would be eligible for your benefit. So depending upon when you're hired in will dictate when you're first eligible for your health and dental benefits. A couple of other things associated with this that apply to all of these. In both of these types of insurances, you can elect into any one of 4 different levels of coverage. The first level of coverage is for just you as an employee. The next level of coverage is for you as the employee and your children. There is another level of coverage that would be for you and your spouse. And there is another level of coverage that would be family coverage, and it's up to you for which level of coverage that you want to elect into. I would caution you with any of these that we do have a plan year that runs from July 1st of each year up through June 30th of the following year. And if you do elect into either the health and or the dental, that it is a 1-year commitment financially that you cannot rescind until that time period is up unless you hit what's known as a qualifying event. I won't go into qualifying events in this video, but let's just say that there's not very many of them. So you need to understand that if you go into this, that in most cases that you're going to be committed for a year. There is a sheet that you'll be given at the time of hire that looks like this. That is a sheet that will ask you to fill out to make your elections on. And on that sheet, it will have the elections for the amounts for out of your gross wages for each biweekly pay period. And you can read through that to see what the different rates are. But beyond the actual rates with this, I did want to share with you a little bit about each one of the plans that we do offer. The richest coverage that we offer is a plan that we refer to as the HMO 25 plan. These are all plans that are offered through Anthem. The HMO 25 plan has a booklet with it that looks like this that you'll get when you're first hired in, and it will tell you all about the benefits that are associated with that book. There's a number of different features with each one of these plans that have varying levels of coverage depending upon which plan that you elect into. The HMO 25 plan, as I mentioned, is one of the richest coverage or the best coverages that are out there. It's also one of the most expensive plans as far as premiums go to be able to pay for. Some of that cost is covered by TFC, and then as I showed you on this sheet, some of those costs are covered by you as an employee. So it's up to you whether you would elect into this plan or into a different one. It's $25 to go to the doctor on this plan. For your primary care physician, it's $50 to go to a specialist. Probably one of the other best features in this plan is it has a co-pay for outpatient surgery. That is $300 for a flat fee. If you do go into the hospital, It's $350 a day for a maximum of $1,750 for each hospital visit. So it's a fixed dollar amount on this plan, and that's some of the best coverages, or the best coverage that you'll see of any of the insurances that we have. On page 39 and 40 of this booklet, there is a whole table, as there is in each one of these booklets, of what the coverages actually are, and you can review those on your own as far as what the coverages are. But this is a traditional HMO plan. One of the other things that I'd like to point out with this plan is that this is a zero deductible plan. What a zero deductible plan means is that the insurance starts to pay less the copays that I mentioned from $1 with it, where there is no initial deductible that you pay before the coverages start to kick in. Very similar to having a zero deductible auto insurance policy. I guess that's the best way to explain it. So anyhow, that's the HMO 25 plan. There are 3 other plans that we offer in addition to this one. One of the other plans is actually listed in this same booklet that I've been talking about. This one is a high deductible plan that's also in this booklet that we refer to as the HMO 5000 plan on pages 42 and 43. It has those same tables in here, and we'll list the coverages. It does have some coverages in there for doctor's visits where you have a copay and then the insurance pays for the rest. But the majority of the bills that you would receive for health insurance have a high deductible of $5,000 for the individual deductible, meaning that you would pay the first $5,000 before the insurance starts to pay, or for a family has a deductible of $10,000. So it's a high deductible plan. The one advantage to this plan, or one of the advantages to this plan, is that for the employee-only level on a biweekly pay period, the cost to you as an employee is considerably less than you'll see on the other plans. That number for this year is $41 per biweekly pay period out of gross wages. So it is a fairly inexpensive plan, but please understand that the coverages are much more limited. One of the reasons that we offer this plan is that this plan is compliant with the Patient Protection Affordable Care Act, which means that this is adequate and affordable coverage under the law to you that puts you in compliance with the Affordable Care Act laws. So you would not be subject to any type of federal fines for not having health insurance if you have this, and it's at a fairly minimal cost to you with it. But again, understand that the coverages are limited. One other thing I would point out with this plan is that because we do offer this plan, that TFC employees are not eligible for tax credits under the Affordable Care Act, as you would see if you go out to healthcare.gov, that you are not eligible for tax credits under that because we are offering this plan as an employer that's adequate and affordable under the law. So anyhow, that's the second plan that we have. That's the HMO 5000 plan. I do have 2 other plans. One of the other plans is the PPO plan. This has its own booklet. It's called the PPO 30 plan, meaning that it's $30 to go to your primary care physician. And it's very similar to the other booklets where it has the different coverages listed in it as far as what's covered and what's not. In this booklet, it's a little bit earlier in the booklet. It's on page 27 of the booklet, and it has all the coverages listed with it. I will share with you that we don't have a lot of employees that are on the PPO plan. Typically, the only employees that elect into this plan, where it would be advantageous to you, is that if you have dependent children that live out of state that under court order are required to have coverage, that you would potentially elect into this plan. But in most other cases, it probably wouldn't make sense for you to elect into this plan otherwise, but it is an option to you if you wish. So that's the third one. The fourth plan that we have is another high deductible plan that has a deductible of $2,800 for the individual and $5,600 for the family. This means that you're going to pay the first $2,800 of medical expenses before the insurance company starts to pick it up. And for a family level, it has a deductible of $5,600. So essentially two people at that $2,800 level before it would start to pay. One thing I would point out on this plan for this year is that once you do meet those deductibles, then the insurance covers the things in the plan at 100% with it, that there are no more co-pays and that sort of thing, that it's covered at 100%. So that's a little bit different twist than you see on the 5,000, 10,000 plan that I talked about a moment ago, because that is not covered at a full 100%. The other thing that's the big difference with this plan is that this plan has what's called a health savings account that's tied to it. This requires a little bit of explanation as to what a health savings account is. A health savings account is a special bank account that is afforded to you as a subscriber to this one particular type of high deductible plan. Basically, what happens with a health savings account is that the money that is deposited into this account, either by you or by TFC, is not taxed when the money goes into the account, nor is that money taxed when it's withdrawn, so long as the money that it's withdrawn for is used for legitimate medical expenses as depicted by the IRS, which are most medical expenses for your stuff that the insurance doesn't cover. For example, for the first $2,800 or $5,600, it also covers things like dental co-pays and things like that, and some other medical benefits. So it's a pretty good deal with that. How this works is that you receive a card that looks like a debit/credit card, and you can use that card for medical services, or you can pay the bill, your bills online, very similar to online banking, through an online account with it. Financially with this, under the law, you are permitted to put $3,350 per calendar year into this account and use up to that maximum amount. You don't have to put in that much, but you can put up to that amount of money and get the tax deference on it. On any of the other tiers, on the employee children, on the employee spouse, or the family plan, you can put up to $5,650 into the plan each year, each calendar year. If you're over age 55, there's a $1,000 catch-up with it, so those numbers go up to $4,350 or $6,650 for anything other than the employee-only coverage. What you elect to have withdrawn from your check or deducted from your check each payday for the July 1 through the June 30th period is something that is unchangeable for the year. So whatever it is that you elect to have deposited into this account of your own money is not changeable during the year. So, for example, if you had I don't know, $50 that came out of your check, each paycheck. Then over a period of a year, 26 paychecks, you would have $1,300 that will go into the account that you could use for medical expenses that aren't covered under the plan. So it's a way to sock away money to be able to cover medical expenses that aren't covered. The premiums for the high deductible plan for this one are less than the traditional HMO or PPO, so there are some savings with it. There is a company contribution that goes into the health savings accounts that I'll explain here in just a moment. Let's talk about the employee-only coverage. If you elect into this plan, each month the company will put $50 into the health savings account for you just by signing up for this account. For the next, up to the next $50 that you would contribute. So if you contribute between $1 and $50, the company will match dollar for dollar under the employee-only plan. So for example, let's say that you did that and you put $50 a check as an employee-only covered person in this plan. You would get $50 from the company for the initial money that I mentioned a moment ago. You would have $50 of your own money that's going into it, and then the company would match an additional $50. So you would have a total of $150 a month that is going into this plan. Now understand that this is all done on biweekly paychecks, so it's a fraction of that amount on each paycheck, but it works out to those numbers for a month, where it would be $100 flowing in from the company each month for the employee-only coverage if you put the $50 in. So you'd have $1,800 a year that's going into it. If you get a physical each year and have that documented through what's called a fax-back system, the company will put another $100 into the HSA for you. The numbers change a little bit if you're on the employee children or employee spouse or family coverage. The company will contribute $75 a month into that account, and then it'll match up to the next 75. So if you put in $75 as anything other than the employee-only coverage, then you'll have the $75 of your money, the initial $75 that the company puts in, and then another matching $75 or $225 a month. So that works out to a considerable amount of money for the whole year that you'll have saved for medical expenses that may not be covered under the plan. The other thing I wanted to mention is that this is a health savings account. Please do not confuse this with what's known as a flexible savings account, something totally different. A health savings account is the type of account that the money that goes into these accounts you own for life until you spend it. So in other words, over the years, if you don't use up all the money that's in these accounts, it rolls from year to year with it, and you can use it for future medical expenses. These monies can be used for things like health insurance premiums for the future, in COBRA situations, not for your regular health insurance premiums out of the company while you're employed, but for when you're not employed under COBRA premiums, things like Medicare premiums, that sort of thing, that it can be used for that too. So it's a pretty good deal. After you get over a certain dollar amount, these monies can be invested, very similar to how you do in a 401k, and it's a pretty good deal for you. So anyhow, those are the basics as far as the different health insurance plans go. If you have any questions with this, please feel free to stop by or give me a call. On this video, I'll put up my telephone number as well as my email address. And again, my name is Pat Carroll. I'm located out of the corporate offices in Chesapeake, Virginia. But feel free to give me a call, or I'll put up our HR coordinator's number on this video as well. Her name is Jessica Frederick, and she'll be able to answer questions for you as well. Thanks very much for your time. The other thing I do want to mention in here is just a little bit about your dental insurance. Before I sign off here on the dental insurance, it's through Delta Dental of Virginia, and on the same sheet that I mentioned before, you have the different rates that are on here. There is just one plan that you can elect into for the different levels of coverage. You can elect into, as I mentioned before, either under the employee only, employee children, employee spouse, or family plan with it. The insurance does cover up to $1,500 a year per family member. That is a calendar year deductible, and you can use that up to that maximum for each year with it. That's basically it as far as the dental insurance goes. It does cover 100% for 2 cleanings a year, 80% for some of the lighter type of dental work, like things like cavities and fillings and that sort of thing. If you get into more serious work under the things like crowns and periodontal work and things like that, then most of that sort of stuff is covered at 50%, up to a maximum of $1,500 a year. One other thing that I did want to mention in here that I didn't when I was talking with the health insurance, so I apologize, but let me back up here a little bit. On the health insurance for the HMO plan, for the 2800 plan, and the 2500 plan, and for the PPO, everything except the 5000 plan, there is a smoker discount of $50 per paycheck. This doesn't apply on the HMO 5000 plan, but it does on all the other ones. But $50 a paycheck, that if you are a non-smoker, that you have that discount. If you are a smoker and you sign up for the health insurance, and then sometime during the year that you quit smoking, let us know, and we'll make you eligible for that discount. So this is one last thing that I wanted to mention with it. But again, if you have any questions, please feel free to give me a call, stop by, drop me an email, or whatever, and we'll be glad to help. Thanks very much for your time.